Let's take a look at how the pound is braced to ride the storm. We're with HSBC senior foreign exchange strategist Paul Mackel. He joins me in the studio now. So how do you think this budget is going to impact on the sterling?
Well, I think that there's obviously still a lot of uncertainty in terms of the detail that's coming out. There's been some sort of leaks, but we will be very sensitive to any type of surprises. I think that ideally, I think sterling should actually try to hold up through the budget, because you have to believe that actually this new government is trying to do the right thing. They're trying to deliver the medicine quickly. And if you actually try to say, well, what's going on with the US dollar? And the Obama administration is still saying to themselves, well, perhaps we should continue spending more money. I mean, net, I think that what the UK is trying to do is good for sterling, but what the Obama administration is potentially going to do for the dollar is actually quite bad.
So we could potentially see the sterling rise a little further. Is it by how much?
Well, I mean, the way that we're looking at cable, this is more from a longer term perspective, is that sterling dollar should be up around about 162 by the end of the year. That is, that sterling will hold up through this announcement today, provided there aren't any significant surprises. I mean, we have to be very aware of what the rating agencies are also going to say on the back of today's announcement. I assume that they're going to try and be more on the optimistic side. Provided, like I said, there aren't any significant surprises, that is, that they're not showing any indications of raising taxes too aggressively, trying to keep the mix between fiscal expenditure cuts more balanced towards against actually reducing taxes, then actually sterling could hold up. And with that, I think it will slowly find a base and recover through the course of this year.
So from what you're saying, the ideal situation for the pound is to fall against the euro and strengthen against the dollar?
Well, I think that's the ideal situation for, policymakers within the UK. I mean, they want one situation where they want the UK economy to rebalance. And for that to actually happen, you'd have to have UK exports to perform very, very well. And the main direction for their exports is to the Eurozone. So you'd want a higher euro sterling. But from an inflation standpoint, what's really going on, as we know, inflation is actually particularly sticky in the UK. And you'd really probably need some higher levels of sterling versus the dollar to offset some of that commodity price inflation coming through. So strong
enough currency to ward off inflation expectations, but also weak to boost growth. That's
it's somewhat of the Goldilocks scenario.
A difficult feat, perhaps. Thank you so much, Paul Mackel, for your insight.